Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder at LikeFolio. Welcome back to the show, Landon.
Hey guys, good to be here. Thank you.
All right, so we're talking pets, we're talking Chewy. Petco just had earnings earlier this week. Chewy's up about 7% this year. But one of the things, Landon, that when I look at a company like Chewy that exploded in popularity during the pandemic, when everybody was getting pets, everybody was getting everything delivered, is pets only can eat so much, Landon. Where's their growth going to come from? And do you have any data that's supportive of, that they can maybe rebound to some of those growth numbers that they had over the last 3 years?
Sure. I think I think the argument is that the growth comes in new customers, maybe people with existing customers getting new pets, and then just sticking around forever, right? Auto ship is a big part of their revenue. It's about 73% of their net sales right now, and food and health supplies are about 83%. So you can see that for the most part, people are having their food and their health supplies, their the prescriptions, things like that, auto shipped, and that's just this recurring payment that's happening every month, so you don't have to go to the store. So they're very loyal customers, extremely happy customers. So I think that's where the growth comes from, is new customers staying forever, or customers getting new pets and staying forever, or as long as the pet lives, obviously. But auto ship mentions are actually down about 30% year over year, so we're a little concerned there. And I think that to counter that, happiness is up about 4 points. So when you look at the auto ship mentions, you can see the boom in COVID-related boom. Everybody joined on, and everybody came on. Now these are people talking about auto ship in general. When we look at purchase intent, it's down as well, about 39%. That's more about new customers coming in, right? I'm signing up for Chewy, or I just got onto Chewy. The thing about those is that reflects growth, but it doesn't really talk about how much people are staying. When we look at page views, which is very important, that actually has the highest correlation of anything. I think this company might be the highest correlation of all companies with this stat. So this page views has a 0.99 correlation to revenue. So this is basically Chewy revenue. I mean, this is very, very high. We're showing it off about 3% on a year-over-year basis. So the number of times people are going to Chewy.com was really key. The caveat there is that if you looked at this stat last quarter, it was down about 13% year-over-year. So being down 3% is actually an increase. The delta, or the acceleration, is to the upside, but we're still off a little bit year-over-year. So overall, there's sort of a bit of a mixed message. They've got extremely happy customers. They went from 81% to 85% on happiness. I mean, they do everything right when it comes to the customer. They got low prices, personalized service, great delivery, and they have a really broad selection of products. They even send people birthday cards for their pets. Really, really high happiness. And for it to actually be increasing over time while purchase intent is rising is a very rare thing. So I know purchase intent is down on a year-over-year basis, but overall the trend is up and the happiness is continuing to go up. So that is a very strong signal for this company long term. I think short term is where we're a little bit iffy. You've got, this is purchase intent. You see less people are signing up. They're sticking around, and they're very happy, but less people are signing up. And if you're an investor, yes, you want that cash cow company that just never loses a customer, but you really want growth. You need more customers coming in, to your point. So I think that's really key. So they've got some things kind of going against them with the new customer front. A lot of people bought pets 2 or 3 years ago when everyone was locked inside. And if you got a 2 or 3 year old pet, or you just got one, 2 or 3 years ago, you're probably not picking up another one. So growth is going to come in the form of new customers and acquisitions. With pet food and pet supplies increasing in price about 15%, according to the Wall Street Journal, much higher than human cost, human food, human prescription, things like that. I think people are maybe shying away from it. So I think that is the caveat here for this company, is where's the growth, just to go back to your question. So we are a little bit concerned.
Landon, global pet spending expected to be $236 billion by 2030. This company, they only had $2.6 billion in sales in 2022. This is a company that's getting into health insurance, telehealth services, pet pharmacies. They're doing a lot of things, but you're right. It's this auto ship program. You mentioned 73%. This is a company that's still growing. Some of it is slowed, but this market isn't going anywhere, Landon. The fact that everyone is judging these small growth companies on coming out of the pandemic and how popular they were during the pandemic, when this company is actually making nice progress in their growth, and this business, this industry isn't going away, and they're adding 2 more fulfillment stores. That lowers cost, that lowers wait times, so they're going to get more efficient. But Landon, it's still about subscriptions. It's still about that auto ship program. They're going into a growing industry, Landon.
Yeah, I agree 100%. And I think that, thinking about it, just based on what you said, Kevin, I mentioned that their food and health supplies were 83%. That's 5 out of 6. So every $6 that they make or that they bring in, 5 of that is from food and health, non-discretionary, right? So I think that as they expand with these very, very happy customers, very loyal, happy customers, they can introduce new products, new services, and my guess is they're going to have a very receptive audience. So I think that investors really need to temper their expectations. They're not going to have 2020 rocket growth as everybody's going out and buying new pets. That's not the case. I think that what they're doing, though, is they're building a long-term business with extremely loyal, extremely happy customers. And if you've got that base, then you can start to sell lots of things to them. So right now, it's pretty much all food and health supplies. But as they, expand into insurance or more discretionary items like you're talking about, then I think you could have some upside there as well. So they can get more per customer, more dollars per customer. I think the more customers is the hardest part, but they're executing extremely well on the happiness side. So they're going to be able to get more dollars per customer.
Yeah, and you mentioned the page views are down on your 30-day moving average chart, and that just goes into your theme here that it might be sketchy here for a while until they do more of that cross-selling with some of their other businesses, whether it's insurance or the pet pharmacy thing at this point. But, Landon, when you look at this going into earnings, are you guys positive or negative as far as your score goes?
Sure. So long-term, very positive on this company. I'm buying dips, and I don't think there's going to be a huge sell-off. When we look at the earnings score, it's -9, which is basically neutral, leaning slightly bearish, but not really much to it. So, I might be in a position where I'd wait for a dip and pick some shares up because I love this company long term. It's got everything going right for it. I don't think they're going to blow it out. I don't think they're going to disappoint huge. I think it's going to be more probably of a sideways move, which is wild because that's what the stock has done for the last month. I mean, it's pretty much just been sideways for the last month. A lot of anticipation, I think, for this earnings report, but I don't think it's going to move the needle in a huge way. But again, long term, love it. Short term, might be a small pullback.
Gotcha. Yeah, and consolidation over the last 6 to 7 months here in the shares going into this report. All right, great stuff, great data as always, Landon. Appreciate it.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder of LikeFolio, breaking down the data here for Chewy.